Good afternoon and welcome to today's podcast. This is our first ever podcast. I'd like to welcome everybody welcome everybody in joining our podcast. We certainly appreciate you here. If this is your first time, please hit that like and subscribe button. We will get into our show in just a minute. All right. Thank you for bearing with the corny music. No, I'm just kidding. I love that song. Shout out if you can figure out what song that is. Okay. I want to welcome everybody again. My name is Marshall Reardon, and I am a certified financial analyst for ACC. Who we are is we were founded in 2015. We are a human resources consulting firm located in Indianapolis, Indiana. We specialize in staffing, employment law, as well as investment strategies. We've worked with many small businesses throughout the Midwest and helping them develop their retirement plans, as well as provide financial education to their employees. The purpose of this channel is just to give financial education. We do not give financial advice. This is not financial advice. If you are interested in financial advice, please contact me at the email address below. That's info@accconsultinglcc.net. But the purpose of this channel is to disseminate and share information amongst you all. This channel is open to beginner traders, advanced traders, expert traders, pretty much anyone who's actually interested in trading. So your comments are welcome. We're going to go over the stock markets. The stock market is extremely hot right now. I think it's time that we take a look in the next couple weeks at the market. I mean, there's some big moves there. It's jumping a little bit more than some of the futures, as well as bonds. So we will be going over other investments like real estate, currency, crypto. But for the next couple of weeks, I think that we need to go over stocks, especially now that it's earnings season as well. So this is a public webinar. Because this is our first podcast, I will be going over some beginning tips and tutorials on trading and investing. I will warn you that it will be very rudimentary, so in no way, shape, or form is this going to give you what you need in order to have a good understanding of investing strategies. So I do suggest that you reach out to us if you would like to learn more, or if you do your own research. But this is just to kind of whet your appetite, give you something to look forward to, maybe spark your curiosity and have you continue to look or to gain more information on the subject. So if you're interested, leave me an email, info@accconsultinglcc.net. Look forward to hearing from you, and we would be more than happy to hear what you have to say. Okay, so why invest? Okay, so investing offers passive and supplemental income. Okay, I think most people know what supplemental income is, right? It's the income outside of your primary source of income that might help you pay off some bills or save some money. I don't know if a lot of people know what passive income is. And passive income is basically making money from money or other assets that you have. So for example, the stock market. If I buy X number of shares and I make a profit of that, then that would be considered passive income. If I have a house and I own it and I'm leasing or renting it out to individuals, that would also be considered passive income. So It's always nice to have multiple streams of income for life's unexpected challenges, so investing is a way that you can do that. It's a cool hobby that offers financial rewards. Investing is a challenge. It's very hard to do. It will make you get out of bed and try to refigure your game plan. The rewards that you get is not only financial, but it's also mental because you get that reward for all the hard work that you paid off, or the hard work that you put in pays off. So that's a good feeling. So it can be a good hobby. It can offer financial rewards, but it can also offer other intrinsic rewards as well. This kind of goes back to the passive income, making money off your money. It's a great way to maximize your labor and get the full value of your self-worth. And lastly, to gain freedom. A lot of traders trade for a living. They don't have to work for anyone. They enjoy their free time. It is stressful. I'm not going to lie. We'll go over that as well. But you get that free time that you will not get working at a 9 to 5 or in a cubicle. So that's another thing that another benefit of investing. All right, the dangers of trading. So as with anything, there's bad things that can come about with trading as well. So there's a gambling addiction. All right, so trading is essentially gambling. We do not know what the future is. There's a degree of speculation. Thus, when we put our money at risk because of the speculation, in essence, we gamble. So we need to be aware of that. We're gamblers. If you're trading, if you're investing, you are a gambler. So make sure that you don't make gambler mistakes. Make sure that you're mitigating your risk. Is going to be huge, and we'll go over those principles later. Income loss. All right. So there's risk. Anytime that you're putting in your money, there's a chance that it will go south and you'll actually lose money. So you have to be okay with losing money. You cannot be too attached to money where a loss can get you down. It's a very psychological game, and so those with strong psychologies and who aren't attached to money are going to be better suited for these type of issues when it comes to trading. And then lastly, depression, right? I see so many traders try to hit the fence and put in their whole account, and then they lose maybe a third, maybe half, maybe all of their account, and that leads to a massive depression. Especially if you have family, you have kids, and you have put in all this time and all this work, and the market goes a different way that you didn't expect it to go. That can happen. So you want to make sure that you're mitigating your risk and that you are doing stuff outside of trading so that you don't fall victim to the depression. All right, so it's not just about trading, right? There's different types of investments. There's real estate. There's market trading, right? That's your stocks, your bonds, your mutual funds, your cryptos. There's land. There's a lot of other things. So I don't have enough time really to go over how many different types of investments there are. There's a lot, believe me. I feel it's better to take a bite of the elephant, one small bite at a time. And so that's what we're going to do. We're not going to go over every single bit right now. I just want you to be aware that it's not just about Wall Street. There's other things. But once again, we are going to be focused on Wall Street because I think that's the basis. And we need to focus on that now because it is earnings season and we have a lot of big companies who are going to be reporting their earnings. And that's going to be a very exciting time for the market. All right, market trading rules. So here at ACC, we have a few rules that helps us become better traders. We suggest that you take these rules to heart yourself, so that when you're trading, that you trade intelligently. The first thing to do is cut your losses quickly. We cannot predict the market. We have to go by what the market is doing. So if you enter a position and it goes a way that you did not think it was going to go, you need to get out of that position. You need to cut your losses quickly. You need to set a stop loss, meaning you need to have a certain amount that you will lose, that you're willing to lose. And then once you get down to that certain amount, you need to get the hell out of there. And a lot of it's going to be following your rules. I see a lot of traders who hope that the stock price will either go back up or will go down, and they just lose money, and eventually they blow up their account, and then they're not a trader anymore. So you don't want to be like that. You want to make sure that you cut your losses extremely, extremely quickly. The next thing is we take moderate to small positions. And the reason why we do that is because we want to mitigate risk, right? The worst thing that can happen is that you lose a large portion of your account. In order to avoid that, you want to take small to moderate positions. Do not use all your margins. Really don't use margins at all. If you can use cash, that's preferable. Sometimes you want to use margins if it's a really, really good play and you feel like you're going to hit it out of the park. I think it's a great time to use margins. But if you're really just looking to if you're just you found a stock that you've been watching that you think is going to go up, but you don't have that strong inclination, then you need to take a moderate to small position. We never trade more than 3 positions, and we like simplicity here. There's several reasons for that. Unless you're using if you have a small account and you're using Robinhood or Webull or something like that, this may not be a big a deal to you because you have free commissions. But to us, it's a big deal because we have a much larger account, and we have to pay for commission. So in order to cut back on slippage, in order to monitor one trade and not a whole bunch of trades where we get confused, our philosophy for our analysts is that we do not take more than 3 positions. The next rule is preserve your capital. So the worst thing a trader can do is give back their capital to the market. Right? That's frustrating. That's no fun. You have a win, you have another win, you have another win, then you have one loss. You lost all your gains. So you got 1 win, 2 wins, 3 wins, then you have a loss, but that loss is so big it takes all your gains from the 3 wins. That is not a good trader. I mean, that's pointless. So make sure that you're preserving your capital. Lastly, don't overtrade. Waiting is trading. That's a huge thing. Waiting is trading. You're not always going to have an opportunity every day. Some days there's going to be no opportunity, and in those days you do not need to trade. I know this is very boring, but waiting is trading. You will save so much money by not trading and waiting than you will trading every day. So keep that in mind. The more trades you make, the higher probability you have that you will lose. So again, waiting is trading. That concludes the brief tutorial segment of this video. We're going to go into our 3 stock plays for this week. We hope you enjoyed the beginning tutorial. I know it's not a lot. If you would like more tutorials or more training, please reach out to me, info@accconsultinglcc.net. The link is below the video. Please contact me. Unfortunately, we don't have time to go over all the basics because we do want to get into the market and analyze what's actually going on currently. But once again, please make sure that you check out that video. Okay, so on to the stock picks. All right. So the first stock pick that I have is Whirlpool, and their earnings date is April 22nd, 2019, and that's going to be after market closes. I really like Whirlpool. They have had some, that's my LinkedIn. Apologize, let me get the right browser up here. Computer's running a little bit slow today. So as soon as my computer loads, I'm going to pull up the Whirlpool chart so you can take a look at it. I have this link on the bottom of the video. The website, if it ever loads, I apologize for the slow computer. So how about this? Let's wait for it to load and then we'll get into it. There we go. Almost. All right, so the website is FinViz. FinViz is a great uh, chart charting program. It's just a really good stock market analysis website, not program, excuse me, website. It'll give you the intraday graph, multi-day, weekly, monthly graph. It'll also give you the fundamental data here at the bottom. I really like to use it when I'm looking at individual companies. Oh no, what is going on? Uh-oh, there we go. You guys looked at my outline for today's episode. Okay, so you're going to see a bunch of fundamentals here. Um, what I'm really looking at is a couple things when it comes to earnings reports. A lot of people look at fundamentals, okay, and charts. So obviously the charts up top, your fundamentals are below. There's a lot of numbers in there. Later on, we're going to go over what that actually means. As you can see, we're we're going towards a new high for Microsoft. So it's trading very, very high right now. Um, there's a lot going on. But when it comes to earnings seasons, I think what might be more important than the fundamentals is actually the sentiment and the news catalyst. Okay, because Microsoft's earnings report is going to be on Wednesday, but or excuse me, Whirlpool's earnings report is going to be on Monday after market close. But Whirlpool during the day might have some upward price action or downward price action leading up into earnings. So usually the price of the stock will be modified, or there'll be volatility leading up to earnings. So that's why on tomorrow, on Monday, April 22nd, 2019, I will be looking at Whirlpool because I believe that there's a lot in the news going on in terms of Whirlpool. So I'll include that FinViz link below. Okay, so here we have the NASDAQ, and this is actually NASDAQ.com. However, Zacks Equity Research Group actually wrote this article. Zacks Equity Research Group, I will also include their website at below this video. They're a really good website to do research. I find them very good in terms of fundamental research, in terms of news, catalysts, and sentiment. So if you're ever wanting to get more information, this is a good resource. But let's look into Whirlpool Corporation. Okay, so Whirlpool again is slated to announce April 22nd, Monday, April 22nd, 2019, after the closing bell. The company has delivered positive earnings surprises in the preceding 2 quarters. And also its average 4-quarter earnings beat came in at 4.6%. Okay, so basically, if you don't know what an earnings surprise is when a company comes out with earnings, different financial analysts from different companies will have estimates on what they feel their revenue, what the revenue from that quarter that's being reported on should be, what the earnings per share should be, and if they are actually meeting what's called their guidance. Okay, and we'll get into guidance in a minute. But if a company beats their revenue, beat the analyst revenue projections, as well as beat their EPS projections, the chances of that stock price going up is greater. If they don't, the chances of the stock price going up going down, is greater. Okay, so they beat it, it goes up. They don't beat it, it goes down. So that's very important. All right. Another thing is what's called guidance, and so every time a company reports, they oftentimes offer guidance on where they think their sales for the next quarter is going to come from, if they think they're going to have weaker sales, stronger sales, or what their game plan is going to be in the future. So one of the ways that you can do this is by looking, and if you look, it says Whirlpool's robust product pipeline, solid innovations, and cost productivity initiatives are commendable. Moreover, the company is benefiting from strong execution or higher prices and robust price mix owing to benefits realized from strategic actions. Okay, it's also citing that there's been strong, solid growth in the North America segment. Um, so those are some. That's a good piece of information. Okay, so they're experiencing stronger growth in North America, and they also are charging higher prices. So those are two key things. All right, so now we want to look at some things that aren't so good, right? Because it can't all be roses. So let's take a look at this paragraph here. Despite cost productivity programs, Whirlpool witnessed soft margins in fourth quarter 2018. Adjusted operating margin was hurt due to elevated expenses, lower unit volume, and adverse currency. In addition, volatility in commodity, can't read today, prices and increased tariffs on steel and aluminum might affect the company's operating performance in the pre-reported quarter. Okay, so they had a little bit of issues with their margins, right? The steel tariffs that Trump put in has affected their sales. Let's see, lower unit volumes, and then I think as well, right? So probably lower sales volumes that can to make up for the cost of possibly shipping or whatnot. I'm assuming so. A little bit, bit negative. I think that's why they're increasing their prices to maybe offset those soft margins. So they do have a plan, and it looks like it's been successful. So still want to keep an eye on that just to see which way it goes. So let's read down here. Apart from the soft margins, Whirlpool has a dismal sales surprise trend, having lagged estimates for the seventh straight time in the last reported quarter. We note that EMEA region has been troubled for a while due to soft volumes combined with raw materials inflation and unfavorable currency for first quarter 2019 revenues. The Zacks consensus estimate is pinned at 4.83 billion, down nearly 1.6% from the year ago period. Nevertheless, the company has taken actions to right-size its EMEA region by stabilizing volumes across the segment core businesses. It expects volumes in the region to remain positive in the first quarter. These apart, Whirlpool's effort to improve margins through a series of measures, including cost-based price increments and cost reduction initiatives focused on improving business efficiencies, are encouraging. Notably, the company introduced global cost-based pricing for its trade customers to mitigate raw material inflation. Okay, so they have a plan. They're working on straightening out those margins by increasing their prices for their materials to the completed product, because some of those raw materials, right, the steel, the copper, all the widgets associated with making the product is more expensive. So the end product is going to have to be more expensive in order for them to kind of get those margins in control. I'm looking at Whirlpool tomorrow. I think that's exciting. I think it's a sleeper. I think that's something that you can get in first before the big institutions might go in there, and it could be very, very worth your while. Okay. Next up, we have Microsoft. Microsoft's earnings date is going to be April 24th, 2019, after the market closes. So we have a position in Microsoft. So this is the one position that we will be playing this week amongst the earnings. It's at least starting off. I'm actually very, very bullish on Microsoft. I think it's got a lot of great plans. I think we're gonna see some good things. So let me go into what's going on with Microsoft. Again, check out FinViz. Take a look at the chart. I want to get you to start using FinViz. Get comfortable with the look of it. There's a lot of useful data here. We'll go over the fundamentals in later videos, but right now we're going to focus on more of the catalysts and the news behind the stocks, because that's what's going to be driving price action going into this week more than anything. Outside of earnings season, fundamentals become I feel more important. But right now we're looking for news and catalysts and what's going on for the company. So here's FinViz. Check it out. Microsoft chart. So what's up with Microsoft, right? Do they just still make the desktops? Um, they do, but they also do a lot of other things as well. So last year, during the fourth quarter, Microsoft sold 100,000 of their virtual reality HoloLens headsets to the United States Army for a deal of $479 million. This was a successful contract, really opened the doors in terms of, not open the doors, but it is keeping the relationship with the Department of Defense and Microsoft. Microsoft has usually been a pretty big software contractor for the Department of Defense, and this deal was just its way into the future. So they do have some success where they've had growth in sales from that. So something that you might want to check out there. They're really getting into the defense, the defense sector. Also, another thing about Microsoft is that they are competing with Amazon for the Department of Defense JEDI contract, which will be their data center cloud-based storage service provider. So the two competitors left for Microsoft and Amazon. I think Microsoft has a better chance. They have proven success in collaborating with the Department of Defense. They're tried and true. I think will have a very, very good edge over Amazon, but we'll see what happens. But either way, if they don't get the contract, you can assume that that's going to affect the price one way. If they do get the contract, it'll affect Microsoft's price another way. So the decision for the JEDI contract will be July of this year. We will find out who wins that contract. So what does this have to do with Microsoft's earnings? Well, it's just another reason to be optimistic about the stock. It's gaining some excitement over Microsoft again, and so a lot of investors and analysts are going to be paying attention to Microsoft just because they have all this buzz going around them. So it's going to help the company tremendously. If we look at the Motley Fool, the motley.fool.com, I'll also provide that website below. Offers great stock market analysis and news articles. So I pulled this article up on Microsoft, and if you can look, second quarter revenue was 32.47 billion, up 12% year over year. However, it was slightly below the analyst consensus forecast for revenue of 32.51 billion. All right, so didn't necessarily hit that revenue projection last quarter, but the top line miss may have investors watching the company's revenue growth more closely when the tech giant reports its fiscal third quarter results. So you're going to get a lot of eyeballs on what did Microsoft do, and so that's good, right? It's going to affect the price either way. If they disappoint, it's going to go down. If they beat expectations, it will go up. In contrast, in constant currency, Microsoft's fiscal second quarter revenue increased 13% year over year. On average, analysts are expecting Microsoft to post fiscal third quarter revenue of 20.8 billion, up 11.3% year over year. Okay, so it's still got projected growth up. So here we go. Last quarter, Microsoft reported its EPS to be up. It was it was $1.10, up from 96 cents a year ago. And on average, analysts expected non-GAAP EPS to be 109. So it did beat analysts' expectations in terms of earnings per share, just not in terms of revenue. But it was a slight miss, and we'll see if they can come back again this year and surprise. Commercial cloud revenue growth. Okay. So this is a guidance that we were talking about. So there's three things before an earnings report that you want to look in a company. You want to look at their past history. Okay. You want to look at news articles, any positive articles, negative articles that view the sentiment of investors, and then finally you want to look at the guidance. And the guidance is, what is that company's plan to for the next quarter and into the future. How are they going to grow revenue? How are they going to cut costs? What is their plan? So we're always looking for that guidance. So what is Microsoft's guidance? Okay, well, we can see here that they're focused on commercial cloud revenue growth. So if we look down, you see a key driver for Microsoft's revenue growth in fiscal Q2 was the company's commercial cloud revenue. This composed of revenue from Office 365 Commercial, Azure, and Dynamics 365 products that are central to Microsoft's ongoing transitions to the cloud-based business model. Okay, so they're really looking to grow their commercial cloud market, and again, they're going for that contract, that JEDI contract, which will be decided in July. So they have a lot of steam, I think, to go up and reach new highs, or they have a lot of steam to go down and disappoint. So we want to look at Microsoft for either shorting opportunities or buying opportunities, because I think either way it goes, this is going to be a great stock to keep an eye on. And lastly, we have Hershey's. Their earnings date is going to be April 25th, 2019. This will be before market opens. I want to show you my LinkedIn. Keep clicking the wrong button. How to learn more about TD Ameritrade. All right, FinViz. Again, I always look at FinViz. We got Hershey's going on. If you look at their chart's pretty decent. They're having a good year. If you look at that. Some fundamentals down here. I know that you're probably, if you're new, you're like, what in the world is all these numbers? Do not worry, we'll go over that in future broadcasts. But it is earnings season, so we're going to focus on potential news catalysts instead of fundamentals. But there is the Hershey's company. All right, so the Hershey's company has a lot going on right now in terms of executive leadership changes. So the first thing, I found this article. This is Penn Live. I don't know what Penn Live is, to be honest with you. So I'm not going to endorse that. But basically, I did fact check this, and this is accurate, that they're getting a new CFO. Okay, so Steve, I think it's Voskuil, will join Hershey on May 13th as a Senior Vice President, Chief Financial Officer. And so this news came out on Friday. So the market hasn't really had a chance to react to this news. And Hershey's earnings is on Thursday. So this is going to be really interesting to see how this affects the stock price. Let's see, they're also getting it says Rohit Grover has been promoted to president. Terry O'Day has been named to Senior Vice President, Chief Technology and Data Officer. And Jason Ryman has been promoted to Senior Vice President and Chief Supply Chain Officer, effective June 1st. So there's a lot of changes here. This could be good, this could be bad. I'm going to take a look at this because I don't know if this is going to be good or if it's going to be bad. I'm just curious to see how this is going to affect the market, or excuse me, affect the stock price into earnings. All right, so let's look at brass tacks in terms of Hershey's. So Hershey's, we're at thestreet.com. Thestreet.com is another good website as well. It has a lot of different articles. So the more articles that you read for Catalyst, the better decision maker you'll be when it comes to investing. So I will also post this this website as well. All right, so Hershey's gained 0.5% to Hershey's gained 0.5% to 106.10, even after the chocolate bar and candy company missed Wall Street's fourth quarter earnings and revenue expectations. Okay, so they last time increased their price even though they missed it. So that's interesting. And I read that, but I want to go to take a look. Bear with me. The strategic investments we are making in our core confection businesses have resulted in improved retail trends and margins. Michael Buck, President and CEO, said in the statement, our recently acquired snacking brands, which is Pirate Brands, continue to generate strong growth and deliver it against our financial objectives. And our international business generated a record year of probabilities. We are excited to build on this momentum in 2019. Okay, so this was January 31st, 2019. So it went up, but because they acquired these new snack brands like Pirate Brands, there's more positive sentiment. So the price went up, even though they missed revenue, and expectations. Okay, so those are our three stock picks: Microsoft, Hershey's, as well as Whirlpool. So we'll be following that. We've taken a position on Microsoft. So if you have any other stock picks, or if you think that if you want to make a comment about our stock picks, please leave a comment below. We will be streaming live Monday through Friday to see how everything goes, as well as to compare charts. So we hope that you listen to our podcast and that you check us out on the live stream. So I wanted to leave everybody off with this because